when you look at the traditional economy, the blue chips, the stock markets, you keep saying how things are looking bad. There's a slowdown. But then you come to the startup universe and it's so different, a totally different picture over there, a parallel universe where you're seeing so much energy and so much enthusiasm. So whereas investors are fleeing the old economy, they're flocking to the new economy. Alteria Capital has shown just that. It's raised 960 crore rupees. Its investors include the likes of Azim Premji, Bansal, IndusInd Bank. And to discuss more about this latest funding round, I've got one of the founders with me right here on Startup Central. Vinod Murli, welcome to Startup Central. Congratulations. Thank you so much for joining us here on the show. I've got to say this, and I was just saying this, you look at the startup universe, you look at Alteria Capital and others, it's a parallel universe in what's going on in the old economy. There, investors are fleeing. Here, investors are lining up. What's going on?
Actually, that's a very good point that you made there. So we've seen a groundswell of interest from the domestic investor base where you're seeing a lot of problems across different markets or asset classes. So we all know what's happening in the conventional fixed income buckets where over the last 12 months there have been a lot of issues, but the startup universe continues unabated. There's a lot of dry powder from an equity perspective, but what's interesting now is you have the venture-led asset class which can actually give predictable returns, and still it's a play in the same underlying startup universe. So it's like having the best of both worlds where you get a taste of what's happening in the innovation economy, but you don't have to hold your breath for 7 or 10 years to know what's happening to your investment. So for a lot of the domestic investors, this is a midway path, if I may, to kind of get acquainted with this universe. And we've seen a lot of interest, especially in the last 12 months, and that's allowed us to complete our fundraise at 960 crore.
960 crores with a green shoe option, more than the 800 crore rupees that you had initially envisaged while announcing the round. And now I want to ask you, if I look at your previous investments, your portfolio, you've got the likes of Dunzo, Topper, Lending Card, M-Fine. What can we expect going forward? What are the sectors that you're liking? What's buzzing at the moment? We talk about hyperlocal. Today, Byju's is in the news. E-commerce is making a comeback of sorts.
Yeah, I think sectorally we've looked at broad cuts between consumer, technology and healthcare, and financial services as a subset of technology. We don't do sectors like real estate and infrastructure. I think there are two factors driving a lot of our pipeline growth. One is the number of high quality companies has been increasing sharply. So we have a lot of earlier large startups seeing teams come out of them and start new companies. M-Fine is an example where the team came out of Myntra and so on. And the other aspect which is driving demand is a lot of these companies are raising equity rounds faster and larger. That's showing a good level of traction. They're able to attract the right kind of capital. And as they go ahead and do this, having a slice of venture debt is kind of a no-brainer for these founders. We've already, we have a relationship with them. So it's a very frictionless process for the founders, and it helps them structure the round together, reduce dilution. So from a sectoral perspective, I think financial services, as they say, a rising tide, everybody goes up, but when the water comes off, good quality comes through. So we've seen that happen in the last year where a lot of companies which were looking interesting a year ago have struggled to raise capital, but the high quality ones have managed to attract good investors and good chunks of equity. And that allows them to layer on a slice of venture debt. Similarly, from an edtech perspective, we've got Topper, which has done exceedingly well. And we are seeing a broad base of growth across technology, consumer healthcare. And that's definitely the area that we'll be focusing on going forward as well.
So, because you brought up Topper, I'm going to ask you a question which I'm sure you can you can figure out what I'm going to ask you today. Byju's is in the news. Byju's Ravindra becoming India's newest billionaire. Look at the kind of meteoric rise that Byju's has had. What are your plans, or what are Topper's plans?
Well, in my previous life, I'd funded Byju's as well. So I have the good fortune of knowing Byju. So I think for him, what would matter more is that he's influencing the lives of several hundreds of thousands of students across the world now. I think that matters more to him. So from a Topper perspective, I think it's a great product, great content. It's a very strong platform. They're building out on the sales engine. So Topper is, of course, a little bit behind Byju's, but I think education is a very, very deep market. It's possibly one of the few areas where the customer or the parents don't mind spending more for their children. So it's not necessarily a winner-take-all, but I think Topper is doing a lot of things right to ensure that they're building scale. They're having very strong month-to-month growth. So I think the current position is looking pretty good. They have a very, very wide market. Geographically, India has a lot to offer, leave alone going outside India. Once you crack the Indian puzzle, I think you can scale the content offshore, which is what Byju has shown can be done. So I think the keen focus on content, on having the right kind of platform, ensuring that it's a very seamless experience for students, bringing them back to the platform, making them spend more time. I think these are the focus areas for Topper, and Dishan's a fantastic founder as well, having known him for many years now. So feeling pretty good about Topper.
Murli, now I'm going to ask you a question on behalf of all the entrepreneurs, all the startups that are tuning in and watching you. What's it going to take for them to impress Alteria, for them to impress Murli, and make sure that they could actually get Alteria on board? What is your checklist of do's and don'ts? What impresses Alteria?
Yeah, we are simple people, so I think we tend to get impressed easy. No, I think the fundamental thing is we look for companies which have raised at least one round of venture capital. What we try and do is before they raise a Series A, we try and engage with these founders who are at a seed stage or even earlier, and try to guide them on what could be the possible paths towards scaling the company and raising appropriate capital. Once they cross the Series A, that's when venture truly kicks in. And at that point, we look at the business model, the sustainability, what differentiates them. So many of those checklists are very similar to what an equity investor would look at. But the fundamental difference, I would say, is an equity investor looks for long-term, high risk, high return. So they are playing for the big wins. From a venture debt perspective, what we look for is the short to medium term outlook. Does the company have the legs to get to the next round? And that could be a combination of their traction, the business model, the team strength, the market opportunity, the kind of investor interest that is there. So it's a whole bunch of things coming together. But founders need to differentiate between what an equity investor looks for and what a debt or a venture debt provider looks for. There are two probabilities that I keep telling the founders. There's a probability of success and there's a probability of survival, or probability of growth and probability of survival. An equity investor would look at a probability of growth. A debt provider like me would look at probability of survival. A founder needs to survive to grow. So both are important, but you need to ensure that your short term is more attractive, and that's what we look at. We look at what could make a company fall off the rails in the next 12 to 18 months, whereas an equity investor would look at a 5-7 year horizon. So the fundamental expectations are very similar, but we look at who's invested, what is their predisposition, what does the company need to do to attract capital over the next 12 to 24 months, and do we have the conviction that they have the legs to get there?
And I understand that's your very, if I may call it that, diplomatic and generic checklist for investments in startups. But Vinod, one of the big questions also that founders and startups have when they come on the show and when they write to us is how should they even get in touch? Usually it's done by networking. You have to know someone. Someone has to know someone. Is that how Alteria also works?
Actually, that's a very important nuance for venture debt. So a lot of our conversations get triggered because of a relationship with the various venture capital investors. So one area of sourcing that comes through is when there are equity deals happening. And so just to give you a little bit of context, 11 years ago when Ajay and I got together and we were initiating the venture debt asset class in the country, there was no real understanding of venture debt. And At that point, we'd wait for deals to happen and then go and talk to people and say, hey, why don't you consider some debt on top of that? A decade on, what we are seeing now is the founders have also gotten to know what can debt do for them. And hence, as they approach rounds, they start talking about how to structure the rounds better. And hence, it's a combination of new equity investors, existing equity investors, and a slice of venture debt. So it kind of comes together. And in terms of access, I think in today's day and age, that's not really an issue. One thing I found is the founder network speaks volumes. So I've personally found more than 100 different companies. So all of them talk to other founders. There's a lot of referencing that happens both ways. And by the way, it's not one way. So a lot of referencing happens when founders check on who is the right or who's the right person or the right team that they'd want to be with. Because at the end of the day, the thing that worries founders the most is not what happens when times are good. It's what happens when times are bad. Who sides with you? Who's a part of the problem versus being part of the solution? So a lot of these nuances are important for founders because at the end of the day, this is the most important thing for them. As a person who's managing a fund, be it equity or debt, you may have 20 companies or 50 companies in your portfolio, but for the founder, there's one shot at goal. So I think these are several aspects that are being weighed from a founder's perspective before they decide, where to reach out, who to reach out to, who specifically in each team that they want to be partnering with. And overall, is this the kind of relationship that they want to have? After they sort that out, I think creating access has not been much of a challenge.
So, Vinod, I'm going to ask you something. I also like to ask investors this. Do you have a favorite in your portfolio? I know you're not supposed to, but do you have one?
Yeah, you said it, right? I'm not supposed to. No, I think it's always tough to pick. It changes with time. I would put it differently. I think there are different companies which need more time to be spent on them. So today, there are 2 or 3 companies which take more time simply because they're at a stage where they need more support or they just need more intervention. And then there are companies that just raise capital and you just let them be. They need to execute on the plans and you don't want to be in the founder's hair when they're doing that. So unlike equity investors who are on boards and who tend to have a more strategic viewpoint on how the company is going, we are like a non-judgmental sounding board. So we are there when the founders need us. We are available to open doors. We create a lot of opportunities, be it on the business side or even capital, but it's not a necessary thing. So it depends on the chemistry with the founders. So yeah, it's always tough to pick one, right, when we've got 20 companies already in the portfolio. But it depends on time spent, and that varies across different points of time.
Telling me basically, I tried and you're not going to tell me. But Vinod Murli, it's been a pleasure talking to you. Thank you so much for being a part of Startup Central. Congratulations again on the big fundraise, really showing how the new economy is so different from the old economy with the kind of investors that are flocking in. And here's an open invitation. After you make your first investment after this fundraise, you've got to be back on the show. You've got to be back on Startup Central. Here's wishing you and the entire team all the very best.